Welcome back to Alberta Primetime and our Monday Money Panel. Joining us this evening, Jane Ulm, an investment advisor with Angus One Advisory and National Bank Financial. Beth Hamilton-Keene is a director and portfolio manager, More Investment Management in Calgary. And Shafik Hirani, director and senior executive financial advisor with Investors Group. Nice to see you folks as well.
Thank you.
Thank you.
So, how do you choose the investment advisor who is right for you, and just how bad can it be if you choose wrong? It seems some Albertans may have already learned the answer to that latter question, and a $1.5 million fine being levied against David Jones, the founder of Wealth Street Inc. in Calgary, accused of providing unconscionable advice to investors. Beth, let's start with you in Calgary tonight. Quite a hefty fine. I believe that's the second highest fine the ASC has levied. Is the dispensing of improper advice a rare occurrence?
Unfortunately, it's not such a rare occurrence. What I hope is rare is that this dispensing is happening by non-professional advisors. And I would say that's certainly the case here, is that, we definitely see situations where investors kind of flock to that thing that sounds really too good to be true. And this is one of those cases. And as you investigate and look further into the ability of your advisor to give you that trusted advice, that's when you would begin to see the cracks in the veneer, as it were.
Jane, fraudulent activity in any form happens in all walks of life, all cases of business, but in terms of your industry, does it give a black eye?
It makes investors much more wary. They're already wary, they're already concerned because this is their money, their life savings at risk. So yes, it just makes it so they're not sure. What people have to understand, as Beth said, if it sounds too good to be true, it probably is. Usually you research a lawyer before you go to them. You research a doctor before you might go to them. You need to take a little bit of time to at least research the person that's going to be handling your investments. Find out whether they're part of a firm that's part of the Canadian Investor Protection Fund, which is an insurance agency. If they're part of one of the big banks, you know they're licensed. If you're not sure, call the Alberta Securities Commission. Just won't hurt you to check, and you might be really glad you did.
So Shafik, you agree with that? Due diligence pays dividends?
Yeah, and it's unfortunate, but a lot of Albertans skip that important step and they end up sort of left in the cold. There's a lot of help for Albertans for people to go through, and if they're just willing just to log online, even with your iPhone or your BlackBerry, you can log on to the albertasecuritiescommission.com, and they have an excellent website outlining the top 10 scams, the different types of fraudulent investments, how people get trapped. And it used to be with things like this Wealth Street and this concrete, is people would offer these securities without even being licensed. And so you can now search for whether your advisor is licensed. Now, of course, if they're with a larger institution like a bank or a publicly traded company, they are going to be licensed. But there's still a ton of individual mom and pop shops that aren't licensed or that have a newer license called an exempt securities license, offering products of questionable merit. And I think that the Securities Commission has got a good list, and it's a very good starting point for people to go to.
Often the complaint has been how long it takes for this type of thing to be investigated and penalties to be issued and so on and so forth. I would say it's more than just the firm that you want to research, it's also the advisor themselves. And it's beyond just the research. You want to understand the credential. What is the professional designation that individual has that basically gives them that knowledge and expertise to allow them to give you advice. That professional designation is very critical, and that's what will set them apart from other advisors out there claiming to be able to help you. That professional designation, because it's a professional designation, there's a standard, there's a disciplinary review process, there's a fiduciary responsibility in many cases that professional has to put the interests of their clients ahead of their own. That's a very critical piece if I'm an investor looking for professional advice.
Jane, why is it though that we're as investors sometimes so quick to put our trust into someone without doing the due diligence? And I've heard from more than one of you, if it's too good to be true, it probably is. But we're still biting at that.
Because people are basically operating on two primary factors, fear and greed. Somebody tells you you can make 11% when you can only get 2 or 1 in a bank. something safe.
But we even hear 18%.
We can hear 18%. Exactly, but they start doing the math and saying, oh, if I can do that for 5 years, then I've doubled my money. I don't have to have all the other risk, or I don't have to worry about meeting inflation. So a lot of it is a greed factor, and that will get you every single time. You know, as far as what Beth was saying with the credentials, part of the credentials is also continuing education. There's continuing education requirements. So not only do you just get a license, you have to keep it up. You have to keep going to classes. You have to keep learning more. So you're in a better position to advise people based on their situation, because not every situation is the same.
All right, great start to the discussion, folks. After the break, more upheaval in Europe. Is a new deal a new chance for resolution? Our money panel watching closely. We're back after the break. Welcome back to the Nightly Vocal Point. All European countries, with the exception of Britain, approved stricter budget rules on Friday, but will they work or have any impact at all? Our money panel keeping a very close eye on this one. Jane, your initial thoughts on this deal?
Well, first off, we have a framework. We have a framework of a fiscal pact. They said that we won't have details for 3 months. It's largely based on austerity. What they're trying to do is put some teeth into the rules that already exist. Austerity will only go so far. Part of the issue that is out there, seems to be out there right now, is there's not a lot of growth built into this fiscal pact. It's all about cutting back. So we need the economies to grow. If you can grow, that helps a bit. Yes, you can't spend more than you earn, but you still have to have a way to grow as well. So there are some major things that have not been discussed at this point or outlined on how they're going to achieve.
Beth, is it effective if Britain isn't throwing its weight behind this?
Well, certainly with Britain kind of holding back a little, that adds a little bit of tempest in the teapot, as it were, but it really shouldn't affect the overall direction. Britain, of course, as you know, hasn't been participating from a currency standpoint and from the discipline of inflation and budgetary control standpoint. So from this perspective, it should be fine. The rest of the European Union should be able to proceed without Britain's participation.
Shafik, what are you reading into the market's reaction to this today?
The markets are missing a lot, in my opinion, because if you take a look at this reaction, David Cameron, the Prime Minister of Britain, says we're not going to be involved in this framework. And Jane made a very good point. This is just financial austerity. This is fiscal reform with the 26 out of the 27 Euro countries. They still have to go ratify this in their own parliament. So not only is it going to take 3 months to sort it out, it's going to take another 6 months to 9 months to get ratification. And it's just irrelevant news. You know, there's only 17 countries using the euro. I think what the markets are missing is that the ECB, the European Central Bank, just offered 2 trillion Canadian dollars as relief funding. And so you're finding a lot of bigger item pictures like the relief funding, like the IMF's proposal, and like the yield curve, which is inverted, being missed over a politician saying, well, we don't want to play. And I think that's sort of missing. There is also good news along with this bad news. Yet the markets were down 200 points almost today. So, you know, the markets are trading on a lot of psychology right now.
Oil down, gold down.
And the markets
are
markets are trading also on the fact that the rating agencies are weighing in, of course, talking about the failure to begin to address some of the issues. And remember, the whole point of this, the whole brink that we're worried about, is credit freezing up again, and that lack of monetary availability to allow businesses to proceed, to allow governments to continue, and so forth. And that's really the nut of it. And really, have we gotten any further along with that? And the answer is maybe a little, with some of these commitments to kind of reining in spending and obeying those original disciplinary pieces. Now there's an immediate fine that would come into place with this framework. That gets you partway there, but it's still a long-term problem. And the near-term problem is we're still not sure how this short-term debt will continue to roll over going forward. And that's the uncertainty that the market's reacting to.
Shafik, you're also watching Bank of Canada Governor Mark Carney, his speech today. He's talking about Canada being on the edge of the financial story and what should be done in Europe. What did you take away from what Mr. Carney was saying today?
Yeah, you know, I think Mark Carney is brilliant, and I really am a big fan of his. And you know, Europe doesn't affect us directly in any category. We don't do a lot of exporting to them. It's more the United States. Yet the Canadian economy and the Canadian markets are drastically impacted by what's going on in Europe. So he's Basically in his speech he's saying, well, listen, it's the #1 factor that's going to affect the Canadian economy, that's going to affect the Canadian markets, and that'll drive our GDP. Now Canada's sitting at around a 2% GDP. Europe itself might go into a recession. If Europe goes into a negative, 2 quarters of negative GDP, then Canada will follow. So it's his #1 on his radar, and I think it's great that he's focusing on that as well.
Jane, it's already been brought up tonight about credit ratings, watches, 15 countries, I believe, on the bubble. What's that doing for global confidence?
Well, it's on a credit watch by 2 agencies right now. Standard & Poor's and Moody's have both said that they've got them on credit watch. What they'll be doing is going through the different fiscal balances of each country, trying to figure out whether they can meet their obligations. Italy has a bunch of maturities coming due in the next number of months, but their average maturity is somewhere around 7 years. So they don't have a lot of short-term obligations coming up, or not as much as many might think, at least in the next few months. So they might be able to last a little bit longer. Greece continues to be an issue because Greece is the one with the biggest problem most immediately. They have the most money to roll over immediately. So it's really a question of how long can everybody keep moving in the right direction, keep getting this money rolled over? How many bonds will the ECB, the European Central Bank, buy? And can it support it enough to keep it going so that we don't end up with that liquidity crisis that Beth was talking about?
And Beth, if we bring it back to Mark Carney, he's saying today that Canada needs to seize upon the opportunity. We need to look elsewhere to grow. Where do we look? If we're not looking
like
to
every
Europe,
other country in the
Asia?
world, we're looking at Asia, absolutely. Yeah. The BRIC countries, as it were, definitely Asia, India, and in South and Latin America. That's where everybody else is counting on growth and continued demand and stimulus to come from. Of course, that's a lot of people counting on those regions. And I would say, really, in the long scheme of things, whether we see slight recession in Europe or even another slight recession in Canada, whether it's slightly above the line or slightly below the line, it's going to look and feel the same. It's going to be this tepid kind of 2 steps forward, 1 step back kind of growth environment. And I think that's what we kind of have to settle in for and really continue to look for those good businesses to invest in rather than getting caught up in the swirl of the political and economic indicators.
Shafik, I believe we have less than 30 seconds. The Jocelyn Mine announcement coming late last week, Total, $9.5 billion. Good news all around?
Oh, it is fantastic news, and I'm glad you mentioned that, Mike, because I think it wasn't really as publicized as I wanted, but yeah, they're looking at spending $7 to $9 billion for one of the 6th mine in Canada. Total's going to be doing it. You know, out of disclosure, I do speak at Total, so I should say that. This is going to put 4,000 jobs into the Fort Mac development. It's going to be developed in 2017. This is it's excellent news for Albertans, and it does provide the roadmap, because the Natural Resource Minister did say, you know, it took 7 years to approve this. Perhaps we should look at shortening the time, because the people at Total were getting a little stressed out whether this would be an approval in effect, and so they're looking at also just shortening the time.
I think we're stressing out the control room. We need to cut it short. We'll come back to Jocelyn another day. Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Beth Hamilton-Keene, a director, portfolio manager, Moore Investment Management, and Shafik Hirani, director, senior executive financial advisor with Investors Group.